Good morning, everyone, and welcome to the presentation this morning. Today, we will be discussing understanding risk to reward ratios and profit loss percentages. My name is Gail Mercer, and I'm going to be your hostess this morning. Thank you, Jason. Before we get started, I would like everyone to take a moment to read over the Nadex risk disclaimer. Anytime you are trading, there is risk involved, even with binary options and spreads. You should never trade with money that you cannot afford to lose. Now, for those of you that do not know me, I do have over 15 years of trading experience. I started out with a company that programmed indicators and pretty much fell in love with the price bar. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities Magazine, Traders World, and Top Shelf Magazine. I've also been a prior speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options and Spreads, and my latest book, which is Trading Currencies Using Nadex Binary Options. All three books are available either on my website or on Amazon.com. Now, I want to go over what we're going to be doing this morning. And the major concept I want you to learn this morning is risk to reward and how your profit loss percentages affect your trading. Now, I will be using a random trade generator, and this will create fictional profit and losses based on risk to reward and profit percentages. The random trade generator answers simple questions like what percentage of trades need to be positive if using different entry strategies. For example, at the money, in the money, or out of the money. What's the potential maximum drawdown if this particular strategy to enter is used? Now, before we get started, I do want to give everyone we're going to generate 600 random trades. All of the trades are fictional, okay? The exchange fee, which is $2 a round trip, is included. We'll also have the ability to look at multiple strategies for exit. For example, should you always wait till expiration? Can you allow some to expire and others to take profit prior to expiration? And we'll also look at break even. And that means that price moves in your favor and then begins to go against you. Okay? Now, before we get started, I do want to give everyone my contact information. My website is tradershelpdesk.com, or you can email me directly at gm@tradershelpdesk.com. Now, let's get started on the random trade generator. Now, a couple of things that I want to go over before we start generating these trades is you will notice here I have your maximum risk and your minimum risk, okay? And this is what's used in the random trade generator to determine what your risk is on entry. You also see that we have a risk to reward here, and I currently have it set to 1. Now, you can also see that the exchange fee is included, which is $2 a round trip. Now, in addition to that, for those of you that do not know risk to reward ratios, at the money, okay, I'm using a $50 risk and a $50 reward, okay? That gives you a risk to reward of 1. If it is out of the money, generally your risk is going to be about 35 and your reward will be 65. Now, that's on expiration, okay? that would give you a risk to reward of 2.86. Then you have what's called a deep in the money trade. And in that case, your risk would be 75. Your reward would be 25. Your risk to reward ratio would be 0.33. Does everybody understand that? I am using a 600 trade analysis, okay? And that means it's going to generate 600 different trades, okay? I cannot zoom in, but what I can do is enlarge the font for you. Okay, Jason, is that better? And we'll shrink this up some. Okay, so in this case, you can see that the 1-to-1 risk to reward ratio is underwater, okay? Now, the blue line is the profit and loss. The red line is what's considered a drawdown. Does everybody understand what a drawdown is? It means, okay, if you're trading this, you know, from one trade to the next trade, if you have a streak of losing trades, okay, that would be considered your drawdown. Now, one thing to notice on this one is down here where it says average trade profit and loss for the series, you're down $2 on average every trade that you take. What does that equate to? It's your exchange fee. Okay. So, you know, if you're doing just a simple 50-50, okay, and you're risking $50 to make $50 with a 50% profitable trade percentage, you're going to be underwater. Okay. What percentage do you need to at least make some type of profit? And this is where I can change this target one. And let's just type in 55 and let's regenerate the trades. Okay, at 57, and this is where you need to look towards the bottom. Okay, this is a 57.33 profitable percentage. Okay, and you can see this is not a bad equity graph. You have 256 losses, 344 that expire, okay, in the money, okay? Your losing percentage is 42.67, and your average profit or loss per trade is now at $5.33. Does everybody see that? So if you're using an at the money, okay, and you're risking $50 to make $50, okay, then you need at least a 55% profitable percentage, okay? Now, this is not always going to come up with 55. Remember, it's random. It's not always going to be exact. And that's a good thing because when you're trading, it's never exact. You're a little bit over, you could be a little bit under. Okay? Now, that's for at the money. Okay? How many of you use deep in the money? Anybody in the room use a deep in the money strategy? Okay, let's change this to 75 and let's put the risk at 75. Okay, and instead of a 1-to-1, we're going to do the 0.33. Okay, if we regenerate the trades at 73%, okay, do you see how you're underwater? And this is the difference. If you're using a deep in the money, what do you need? You need a higher profitable percentage, okay? So if we go up to 80 and regenerate the trades, okay, do you see how you changed? And now you've taken a strategy that was losing, but because you were able to increase your profitable percentage to 80, you can now say, hey, even though, this is a deep in the money strategy, you could actually be profitable only because your profitable percentage is higher. Does everyone understand that concept? For this is just Excel. Any questions on the deep in the money? Okay, let's go to the out of the money. Okay, we're going to risk 35 per trade. And the risk to reward is going to change to 2.86. Okay, now we do not need a high profitable percentage. Does anybody know why? Because our risk to reward is double, okay? So if we're risking 35, but we're making 65, that's the difference, okay? And this is at 45% profitable, okay? Does everybody understand that? Now, in this case, your average profit or loss per trade is $18.84. Could we go lower than 45? Okay. Let's see. We're still actually at 36% profitable. You're still showing a profitable strategy. Now, what's hard about this strategy? The number of losses that you'll have to take. It damages your mentality for trading. It damages your confidence level if you're taking a lot of losses, okay? If you look at the bottom and under the loss column, you see there's 383 losses. There's 217 profitable trades, okay? This number right here for a new trader is hard to sustain because you begin to doubt your strategy. You begin to doubt your trade entry mechanism, okay? If you look right here at the beginning, okay, you have about 85 trades that really you don't make anything. You're just going from win to loss, win to loss, win to loss, but you're going up and down, up and down, up and down. This is where you become frustrated. You start looking for a new entry mechanism, okay? When actually, if you look at the equity graph, if you just stick with it, you could actually become profitable. There's a potential there. Do y'all understand that? But again, this is the hard part. Any questions on that? Okay, what about if we decide, okay, we're going to use a slightly out of the money. So instead of risking 50, we're going to do 45. And we're going to try to get 55, which comes out to a 1.2 risk to reward ratio. Okay, so we're going to change these numbers. And we're going to say, okay, we want about 60%. But I'm going to divide that, okay? I'm going to do a target on 20% of the trades, and then I'm going to let 40% of the trades expire. Does everybody understand it so far? Does everybody understand the criteria? Okay, so let's regenerate the trades again. Okay, now if we have 20% that we take a profit on, okay, and then we allow expiration on another 40, then you get a nice equity graph. But the issue here is, what are we going to do for risk to reward? Okay, you can't do 1.2 on this 20%. So let's divide it by 2 and say a 0.6. Okay, what does that mean? Okay, that means that this one at target 1 is only going to make about $25, but the ones at expiration are going to make 55. Okay, so let's regenerate again and see what it will do. Your average profit or loss per trade would be about $6.75. But even at, it's really not a 60%, it's about 58% profitable percentage, you would still be making money according to this equity graph. Does everybody understand that? In trading, this is all about numbers. It's what percentage profitable can you achieve on a consistent basis and what the risk to reward ratio is. Does everybody here know how to calculate risk to reward? It's very, very simple. If you are able, well, I'll do it here in this column. Let's say that your risk is 45. You're able to make 25, okay? In that case, your risk to reward would be 25 divided by your risk, or 0.55. Now, what if you have a series of trades, okay? If you have a series of trades, okay, you can always do your total trades. Let's say you had 300 trades total, okay? Out of the 300, 180 or 178 were profitable, okay? What would your percentage be? It would be 178 divided by 300, which is the total number of trades. So in that case, your profitable percentage would be 59.33%. How many of you in the room are able to say, okay, my profitable percentage is XYZ? Anybody? How many of you are measuring this information? This is the first thing that you should start measuring before you start trying new indicators and new time frames. You need to measure this first. Everybody should be logging all of their trades. It's called a trade journal. It's just like a business journal, okay? I don't email out this spreadsheet. How do you start measuring it? Well, if you look, let's look at the data here, okay? All right. And you can see on this one, and this is a very, very easy one, okay? You have trade number one. It was a loss, risking $45, okay? This one expired, and actually the risk was 45, but it made 55, okay? So this one actually tells it. Now, everybody has that ability in Nadex, because what do? You download all of your trades, okay? And if you tally it up at the bottom, then it will tell you, one, your number of trades. You can get it to count your number of trades. In this case, we have 600, okay? But you can also tally it up at the bottom to say, okay, this was my total risk and this was my total profit. If you're failing to know what your percentage is that you're profitable, how are you going to improve? Your memory is not going to be very good. Simply measuring your account balance, it's not giving you what your percentage is. You can actually take a very low percentage and become a profitable trader. I've always been one that I looked at my risk to reward ratio. Why? Because when I first started out, I knew I wouldn't be the world's greatest trader. I was a beginner. So I wanted to devise a way, okay, I'm a beginner, so how can I make these numbers work in my direction? And that's what you're doing. You're making the numbers work for you, for your ability, for your experience, okay? And you'll be surprised at the number of trades that you can make work for you, okay? Let's say you're going to do out of the money, okay? All right, let's do it with 35 as our maximum risk. Now that already cuts your trades down. You can't take every trade because you have to limit it to the trades that only have a $35 risk. Okay, so on the first trade, you're going to try to get one, okay, which is $35. You're going to go in with $35 of risk, and if it gets to 35, okay, you're going to take your profit. Does everybody understand that? Okay, and on the remainder, 100 divided by 35, no, let's do 65, yeah. On the remainder, you would get a 1.857, okay? So let's say you're going to do 10% trying to get the 35, and then we're going to do the remainder letting it expire. So really overall, you're only trying to do a 40% here. Well, that won't work. So let's try 5% here, and let's take this up to 35. Well, that would work. Do y'all see that? What if we could just take break even on 5%? Do y'all understand the concept now? In other words, you're going to let 35% of your trades that are profitable expire in the money. 5% of the trades, you're going to go ahead and take your profit when it reaches $35. And on 5%, if it moves in your direction and then it comes back to $2, you're just going to exit the position. You wouldn't have to be the world's greatest trader. You basically only need a 40% profitable trades. Do y'all see that? So you don't have to be the world's greatest. You just have to know what your percentage is and work around it. Now, should you do this every day? Should you calculate it once a week? Should you calculate it at the end of the month? I typically do mine at the end of the month. And the more experience you get doing this, more than likely, the better your percentages will get. But it's also about being consistent. How many of you in the room will lose 10 trades and decide you need to try something else? That was my favorite thing to do when I started. Lose 5 trades, move on to something else. And you can see it really kind of highlights it when you're doing this equity graph, because every trader, new or experienced, will go through a drawdown. You see the biggest drawdown was right here, right before, and I mean, it's very much like a chart pattern. You see it made a double bottom and then it started back up. Your equity curve will look very similar to a chart. Very similar. You can see here, you went underwater. That means you had a drawdown right here, okay? In this one, the largest drawdown was $571. And yet, at the end of 600 trades, it was profitable by about $2,500. The problem is you give up during this period, so you lose out on the profitable period. You know, most professional traders will tell you they're going to lose at least 3 months out of the year. At least 3 months out of the year, they're going to be underwater. But then the other 9 months of the year, they come back to break even, and then they go on to profits. And one of the biggest mistakes that new traders make is they cannot withstand that drawdown period. which means they never get to the profitable period. Any questions? Okay, if there's no questions, I'm glad you joined me this morning. And I hope you start measuring these statistics because it will really help you in your trading. All right, everyone, have a wonderful day.